Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 5th of January 2017, presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session, we will of course be covering live market analysis. We will go through how we expect the markets to move, a watch list of trading opportunities and an overview of the commodity markets and of course our top trades over the last week. So before we get into it, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies, and the agricultural markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal, and of course, it's a pleasure to be here on FX Street today as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate a substantial income through commodities using our exclusive research-driven strategies. So for further information on the Gold and Silver Club and our expertise, please visit our website, which is www.thegoldensilverclub.com. So it is now 2017, and of course I wish all of you a happy new year. This is the first session that we are doing for FX Street of this year, and for those of you who joined us over the course of the December webinars, and especially the very last session before the festive period over the Christmas holidays, you will note that we discussed something called the January effect, which verily commonly happens in the markets every year over the course of January. And particularly what you want to watch out for is the significant inflows that we see into commodities over the first quarter, but most notably over the first week and over the month of January. So if I just show you the current moves that we've seen so far this week, remember Monday was a bank holiday, so majority of markets were closed, certainly all the commodities were closed. So really this is the move from Tuesday through to Thursday. And already this week, we've seen some phenomenal gains here. We've seen Palladium up over 8% so far, sugar up 8%, platinum up 7%, cotton is up 6.5%, coffee is up 4.6%, cocoa is up 4.3%, silver is up 3.8%, wheat is up 2.5%, corn is up 2.13%, and gold is up just over 2% as well. So what does that mean? Why is that important? It is very important, particularly if you're a longer term trader, to understand this, where at the end of the year, often we see a liquidation of positions, a lot of traders closing their book for the year, closing out their positions. You often see weakness in the markets over the last couple of weeks of the year, but most notably from mid-December onwards, after the FOMC statement, you often see this closing out of positions, which causes a breakdown in price, and often you can overshoot major levels of support and break down more significantly than perhaps you would at other times of year. But then watch out for the buyback at the beginning of the year in January, known as the January effect. Is something that we take advantage of every year. It's a very straightforward way to get involved in a lot of good opportunities right at the beginning of the year, as a lot of investors are allocating their portfolio for 2017. And you can see that very clearly with the inflows that we've seen so far just this week in the first 3 trading days of the year. We've seen some big moves in commodities. Now, as we discussed going back to the December sessions, this is how gold has looked now over the last 30 years. The pattern here known as the January effect, where over the last 30 years, 15 years, 5 years, if you have a look at the cyclical patterns that we see, January, of course, being very commonly a very strong month for the metals. Generally, most notably, especially the first week of the year. Now, over the whole course of January is often very much in the favor of the bulls, but it's the first week where we can see some significant inflows. Platinum, palladium, silver, gold have all broken out significantly over this week so far. We've got non-farm payrolls tomorrow, which I'll talk you through, but I just want to put this on your radar. Well done if you've capitalized on the move so far. If you haven't and you don't know what to do, you're looking for more entries, make sure you stay on to the end of today's session. We'll provide you with details of how you can become a member of the Gold and Silver Club and join us and find out our exact entry, exit, take profit levels. Join us during our live trading rooms, our analysis of the markets, where we go through trade management to capitalize on the maximum amount of profits for these particular moves. So far, January effect is playing out as expected. Note also, especially on gold, that we've had a very similar move to 2015, where after the FOMC statement, where we saw an increase in interest rate hikes, which was the same in 2015 and 2016 over the December FOMC statement. Initially, on the day of that, we saw selling on the precious metals that followed through for one additional day, and then we bottomed out. And so far, that is what we've seen. That's been approximately the 3-week low now was put into gold after the FOMC statement, where to a certain degree, a lot of that had been already priced into the markets, an interest rate hike, and we've seen gold form a base so far. So at the moment, what can we expect in the weeks to come? Certainly the January effect, you want to take advantage of that seasonal play, which typically lasts approximately between 3 to 6 weeks over the start of January. There are some other very key trades to take as we move into February and also March, April, which I won't go into detail on today's session, but it's something that we can look at on future sessions as well. And of course, if you want to find out more about that urgently, just make sure you make an application to join us at the Gold and Silver Club. You can become a private member and get access to that information in advance. Now, moving over to the charts, I think it's only fair now to go over to the metals. First of all, you can see here gold has had this classic move that we often see over the first week of the month. So if we go over and have a look at the weekly chart, you'll note we've broken above last week's high. In fact, last week we saw the move early. We actually got into a trade last week on Wednesday was our entry on this position. Normally we see this move start approximately around the first week of January, the first trading day, but this year actually started earlier. All of our indicators gave us the confirmation to buy gold last week, and currently the trade is up over 300 points profit. You can see gold here trading at now 4-week highs, currently trading at 1,177 US dollars per ounce. It's forming a really nice base here, 1180, the next key level of resistance here. And you can see on the weekly chart where we've got this nice basing formation, we essentially didn't see the break that was a move which was potentially seeing a move down all the way to the 1100 zone if we saw follow through following on from the FOMC statement. But we didn't see a breakdown as significant as that. So a lot of the move with gold here, the breakdown after the interest rate hike, had already been priced in. We saw a move down to the low 1120 level for gold, but you will note we've held on to this zone on a closing basis at 1,130 US dollars. We're now very close. We came up to 1,179 US dollars per ounce just overnight during the Asia Pacific session, and certainly in the short term, this looks like we put in a short-term low at the moment. If we go over to the daily chart, you can look at the basing formation here. Now, in terms of key levels, so 2 questions which I'm getting a lot at the moment. Number 1, where can you enter if you've missed the move? Number 2, what should be your profit target? Okay, so I'll address those 2 questions. Number 1, where should you enter if you missed the move? Well, we have non-farm payrolls tomorrow. Could provide some volatility, could provide a pullback. I certainly wouldn't get into gold whilst it's getting into this short-term overbought condition. I'm expecting more upside for gold, but from a risk to reward point of view, entering right at the highs here is not a good move. If we could get a additional pullback now, could be on non-farm payrolls or next week. We've had several days now of consecutive high lows and higher highs here for gold. It's been about 10 days almost in a row here, 7 to 10 days that we've continued to see consecutive higher highs and higher lows here over the last week and a half. So it is moving well, gold, in terms of this breakout to the upside. If you're long at the moment, it's moving well. 1178 at the moment, so we look like we're on target to hit 1180 very shortly. The next levels I would look at are going to be 1180, 1185, and then above 1185 there's clean air up to 1200. Beyond 1200, that will be important. That is where the price meets the 50-day moving average as well. It's also a Fibonacci retracement level around that zone, so 1200 will be a key level. If we do manage to, possibly we'll consolidate if we come up as high as that in the short term, and then once we break above that level, if we do see an additional break above the 1200 zone, I'm looking for a retracement up to the 50% Fibonacci retracement level, which was the high going back to the US election where we saw Trump win, and we got a spike high of 1,337 US dollars going down to the low, which was from the FOMC statement, an increase in interest rate. With that, we saw a spike low going down to approximately 1,120. The 50% Fibonacci level of that retracement takes us up to 1,230 US dollars. I've also got best case scenario, the 200-day moving average targeted. It's going to be a moving target. It will continue to move lower, the 200 MA, as it catches up with the fall in price from the November elections down to the lows of December. And that currently sits as approximately between 1,255 US dollars up to 1,270. So at the moment, we're taking advantage of the January effect. We're getting a few questions now. Is this the bottom of the gold market? Is this the low? Has that been put in right now? Just having awareness of seasonal patterns, how the markets move at this time of year is quite important. If you've been trading gold for a number of years now and you're aware of this seasonal impact in the market, not just that, we've also seen additional inflows into this. You've got correlated markets, which include gold against the euro, which is leading gold against the US dollar. 10-year bonds have been performing very well. Also, the US dollar index has had a bit of a corrective move over the last couple of sessions here. If we have a look at the US dollar index, you will see where it's broken down over the last couple of days. Had a spike high earlier on this week, broke out to 14-year highs, and over the last couple of days, it has broken down back below the 21-day moving average. Just today, in fact, you can see it starting to roll over and break down here. If we have a look at that on a weekly chart, you can see large rejection candle developing a spike high. I would suggest on a weekly chart, that's a bull trap, breaking above the 14-year highs, only to then retrace, breaking back below the last 2 weeks worth of lows here at the moment. So US dollar index is looking relatively weak here, and as you would anticipate, off the back of that, gold has had quite a significant surge. And of course, it's not just gold here. We've also seen some big moves on other markets such as platinum, which is broken out today up to 966 US dollars per ounce. Platinum has been consolidating now for last about 6 weeks, but it got really tight, this price range, over the festive period. Then over the last 3 trading sessions, the last 3 days, we've had significant pop higher here. So platinum has also managed to break out of this consolidation zone, which is to be expected at this time of year. Palladium has had a runaway move since it breached resistance at the 680 zone. Perfect V-shaped reversal pattern, entering at 680, currently trading just under 740 US dollars per ounce. So it's managed to get a full-on V-shaped reversal pattern. So obviously this got too overextended to the sell side, following on from the FOMC statement in mid-December. And this has played out quite well in terms of taking advantage of the retracement higher here. We're back almost near to the highs of November now. It's been a very quick retracement. Platinum tends to do this, and palladium, they will consolidate for long periods of time, and suddenly within 2 or 3 days they have huge moves. This has moved over 600 points within about 3 days. That's been quite impressive. Gold against the euro, very much leading gold against the US dollar at the moment. This started the move higher before gold against the US dollar. It's been a strong basing formation. It created a high low after the FOMC statement in December and started to give us an idea that gold against the US dollar was going to base once we saw gold against the euro break out last week ahead of a couple of other precious metals. Also, the 10-year bonds have been performing quite well. We started to see those base last week as well. And we did mention that again, just going back to the sessions that we did at the end of December, that the 10-year bonds have been correlating very closely with gold since April, May last year. From Brexit down to the US election, we've seen the 10-year bonds be very closely correlated. And we did note that the amount of inflows into 10-year bonds from the commitment of traders has shown that there's been a significant increase in net long positions prior to this market actually surging. So we saw that big increase actually of net long positions into 10-year bonds just around the time of the FOMC statement in mid-December. And you can see where now that is starting to follow through into the market. We've seen a good basing formation, 10-year bonds very oversold. We're seeing that strong correlation with the precious metals at the moment. So there's a number of different trading opportunities which have played out so far only the last 3 days of the year. So I do hope that those of you who trade commodities have been making money at the moment. It's been very straightforward to take advantage of these opportunities if you know what you're doing, if you're a bit more experienced and you've seen these sort of moves before. It gives you a way to anticipate these moves, especially from a research-driven point of view. There's been a lot of factors which have led to this breakout so far this week. Now, we do have non-farm payrolls tomorrow, which we'll be paying particular attention to. We've also seen silver bid up over the last few days. Gold has been the better performer than silver. If you look at the gold to silver ratio, that has favored gold over silver over the last week and a half to 2 weeks, following on from the FOMC statement. But broadly speaking, gold, silver will be correlated, and we've seen a move in the same direction for both of these markets. Now, as we go into non-farm payrolls tomorrow, we do, of course, want to pay particular attention to the US dollar index, which has started to break down over the last couple of days here after we saw a breakout to 14-year highs earlier on this week. So I am watching to see whether the US dollar index will continue the momentum to the downside, or whether we get some sort of spike high off the back of non-farm payrolls tomorrow. January as a whole, and historically as well, tends to be unusual in that it sets itself apart from other months of the year, where typically the US dollar index moves inversely to gold and silver, whereas the month of January is one of those months where gold and silver and the US dollar can all rally together. And that is most notable in the fact that earlier on this week, on Tuesday, we saw the US dollar index break out to 14-year highs, but yet we still saw gold and silver surge as well. So it's one of those months of the year where it doesn't necessarily mean that a strong US dollar will cause metals and other commodities to break down. It's just the nature of this time. It's the nature of this time of year where we see a lot of inflows into the markets, fresh positions, asset allocations at the beginning of the year, where you can see the US dollar rally, but also a number of different commodities rally at this time of year as well. Now, a couple of other markets I just put on your radar at the moment. I know for a lot of you, you don't tend to trade necessarily the agricultural markets as much, but I would definitely put just coffee on your radar at the moment, which after its significant correction over the month of November and December has started to move quite well over the last 3 or 4 days here. We started to break out following on from the lows that we put into over December. Sugar has been one of the best performing commodities so far in 2017. Sugar has already retraced 50% of the correction it had going back to the September highs, back to the lows of December, where it corrected quite significantly over that period. But we've already retraced 50% of that move over the last week and a half. Sugar has been a very strong performer so far in 2017. And I would also just be mindful of the grains as well, which have been moving quite well, especially wheat and corn have had quite good surges over the last 2 or 3 days here. We've had some significant moves in those markets as well. And then finally, if we go over to oil, we do have the oil inventories coming up this afternoon. So if we have a look at this, oil was interesting in that oil broke out to 18-month highs on Tuesday. Very quickly after breaching 18-month highs, we created a bull trap. So it was a 300-point sell-off from the highs there, which of course would have caught quite a few traders off guard, which is why we had such a significant short-term correction there, 300-point move very quickly. And we're just sitting at the lower end of a trend channel at the moment. We're in the middle of the road at the moment with oil. If you look on a weekly chart, we're right back up to a major level of overhead resistance at the moment. So we are channeling between these parallel trend channels at the moment. We've come back up to the upper end of that resistance zone. I am looking towards the oil inventories today and the Baker Hughes report later on this week on Friday, in order to get an idea of whether oil is going to be able to keep up this sentiment to the upside and get another breach above the 18-month highs here and get a move towards $60 per barrel for light sweet crude oil, or whether this is it for this move so far, whether we've just topped out with this bull trap, whether we're just going to consolidate around the $55 level and slowly start to roll over. Confirmation of that for me would be a break back below the lows from Tuesday and Wednesday here. If we get a break below those levels and start to see a slow and steady move lower here, that could also provide a trade opportunity. So right now, oil is in the middle of the road. I want to get the oil inventory data information available to take another trade here. And I'm also just looking towards the Baker Hughes report on Friday as well. And also, oil does tend to move off non-farm payrolls, especially from impact to the US dollar. So we'll be looking out for that too. So with that, guys, I'll move over to some of the top trades that we have had over the last week, our portfolio performance, trading performance update using our exclusive research-driven strategies. The top trades over this week have, of course, included gold, which has broken out at the beginning of this move, started last week on Wednesday. So far, we've capitalized on a 300-point profit on gold. We continue to hold on to trades here. We've taken some partial profits ahead of non-farm payrolls tomorrow, but we're holding the remainder of our positions here in order to take advantage of the January effect this month. Palladium has been a really fast mover here, following on from our entry coming back to last Friday, the 680 zone. This is currently in over 610 points profit at the moment, starting to get a little bit overbought in the short term here. It's been a 610 point profit so far on this trade, and wheat as well. It's been moving between support and resistance for 3 months now, taking advantage of moves below the 400 zone and just capitalizing on this yesterday, hitting profit target for 240 points profit. So with that, if you would like access to highly profitable live trade ideas shared with you, ready to implement for instant results, all you need to do to get exclusive access to our private members live trading room is go to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. In terms of who it's for and what that includes, whether you're a new trader and you just want to develop a solid understanding of the markets, fast track your results, or even if you are an experienced trader but you really want to take your commodities trading to the next level, particularly in 2017, which we anticipate to be another extremely lucrative year for commodities. If you'd like to find out more about the private members live trading room, it includes the following. Private members get access to our exclusive live trading room webinars. You can watch the Gold and Silver Club expert traders analyze the commodity markets right in front of you, picking out highly profitable trade setups, sharing exact entry, exit points, profit and stop loss targets, as well as walking you through live trade ideas ready to implement for instant results. You get trade notifications via email and SMS so you don't miss out on any trade opportunities, including our take profit target, stop loss, trade management, all of those notifications sent out in advance notice. So you do have lots of time to get into each position. And you also get commodity research, market insights. So private members get exclusive access to our proprietary trading research and insights to help boost your win rate and ensure you're getting on the right side of each trade. And you get all of the following, okay? Exclusive weekly live trading rooms, live trade setups ready to implement, real-time notifications via email and SMS so you don't miss out on profitable trades, exact details of where to enter, exit, place a stop loss, a weekly trading plan with a watch list of trade ideas for the week ahead, live trade support to help you through each trade, and institutional level trading research and commodity insights to give you the ultimate edge in the market. So again, to get exclusive access to our private members live trading room, just go across to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. So www.jointhegoldensilverclub.com. Okay, fantastic. So with that, guys, I wish you a happy new year, a lucrative trading week ahead. You've got non-farm payrolls tomorrow. Again, if you'd like to find out more, do make an application. Good to see you all back here. And we look forward to discussing more trading opportunities, events, and the commodity markets with you over 2017. So with that, guys, have a great day, good trading, and we'll speak to you real soon. Okay, thanks, everybody. Take care. Bye-bye.